In the previous week, Rupee maintained its firm undertone against the dollar and was traded in a tight range between 74.40 to 74.70 in the first 4 days of the week. On Friday, the sharp fall in the BSE sensex by 2.87% led the rupee to test a low of 74.92 before ending the week a lot lower at 74.8600. We expect the rupee to trade in the range between 74.50 to 75.50 with a weaker bias till the end of December 2021. During the second half of December, there is a good possibility of SPI outflows in equity and debt from the purview of profit taking, and hence a weaker bias in the rupee toward the weaker side of the above range is expected. In the second week of November, the forwards were showing gradual fall across the maturities, but the paying interest in the market was seen at the beginning of the earlier week, which pushed up the 3-month and 6-month forward dollar premium to end the week at 3.85% and 4.72% per annum respectively. Encouraged by stable global oil prices, we expect the rupee to hold the support at 75.00 and 75.30 thereafter. Some of the analysts expressed the view that PM Narendra Modi's announcement to repeal the 3 farm laws may raise concerns over the economic reforms by the central government. The repealing of farm laws is likely to weigh on the home currency as FDI in agriculture and farm-related sectors may be impacted. The 2-year US yield has jumped to a high of 0.6870% on 23rd November 2021 as a reaction to the expectation of Fed rate hikes much sooner than previously anticipated by the market. The renomination of Fed Chair Powell for the second term by the US President signaled stability at the Fed and rising bets that the Fed will keep its tightening plans and eventually cut stimulus and hike interest rates faster than expected. Minutes from the last FOMC meeting showed Fed officials are ready to rise interest rates if inflation continues to run high. The latest Fed minutes showed a growing number of policymakers are open to speeding up the tapering of asset purchases and move more quickly to rise interest rates if higher inflation persisted. During the financial year 2020-21, the rupee has appreciated by 2.50% against the dollar, and in the current financial year, the domestic currency is expected to depreciate by close to 3.50%, resulting in a combined effect of 1% depreciation in the rupee exchange rate against the dollar in the last 2 financial years, that is up to March 2022. We expect the rupee to end the current financial year at 76.30 to 76.50, representing a depreciation of over 3.50% in the current financial year. A depreciation in the rupee well above 76.30 level is quite unexpected at this point in time, but any sudden developments or adverse events in the global markets shall have the potential to drive the rupee lower beyond the above stated level. In the last quarter of the current financial year, the market is expecting divestment of Shipping Corporation of India, BPCL, and LIC of India, which could bring in huge dollar flows to move the rupee higher. Despite the expected dollar inflows, the possibility of faster tapering of asset purchases by Fed and 2 rate hikes in the second half of calendar year 2022 shall guide a weakening trend in the rupee exchange rate.